Okay, let's dive into this. Welcome to the Explainer. Today, we're looking at something that is just completely structurally different in the energy sector. We are doing a full teardown of Eni's revolutionary strategy. You see, they've built this massive, repeatable capital machine, and it's literally rewiring how big oil funds its growth. And look, if you work in B2B sales or strategy anywhere near the energy sector, understanding this architecture isn't just, a nice to have, it is absolutely crucial to your bottom line.
Here's our roadmap for today. We'll start with the fast capital engine, then move into the dual exploration model and the satellite business strategy. From there, we'll break down the anatomy of a satellite, and finally, we'll cover selling into a satellite world. Basically, we're going from a financial engine teardown straight into a highly practical sales playbook. Let's get into it.
Section 1. The fast capital engine, a structural shift. Historically, oil majors rely heavily on really slow operating cash flow and a mountain of debt. But as you'll see, Eni is taking a structurally different lightning-fast approach.
Section 2. The dual exploration model, monetizing early. Let's move to and see how this builds into the very first piston of Eni's engine, which is all about monetizing those discoveries way earlier than the industry standard.
The contrast between these two models is just wild. Classic exploration economics, well, they're brutal. An integrated major basically sinks a mountain of capital into some frontier basin and then just waits. They wait a whole decade for payback. It's crazy. But Eni's dual exploration, it completely breaks that cycle. It's so much more agile. They discover, they prove the resource, and then they sell a meaningful stake right while the asset is appreciating. So they essentially self-fund their next drill without taking on any new debt. They're recycling that cash immediately.
To put a very real number on this, take a look at the 2025 divestment of the Baleine field offshore Côte d'Ivoire. Eni sold just a 30% stake and got around €1 billion for it. That €1 billion event is the perfect miniature example of their cycle in action, right? It's discover, de-risk, monetize, and redeploy. That massive payback that used to take 10 long years, it now arrives in a fraction of the time. And the best part? By retaining a stake, Eni still stays exposed to all the upside they created. It's a total game changer.
But here is the real secret sauce. Monetization is engineered in, not improvised later. The sheer discipline enforced here is staggering. For this machine to actually work, every single discovery has to be built to be partially sellable from literally day one. They don't just drill and figure the rest out later. Nope, the data rooms, the commercial documentation, all the governance structures, they are prepped as deliberately as the actual drilling program itself.
Section 3. The satellite business strategy. Focused capital. Now we're scaling this concept way up. We're moving from individual oil fields to entire business units. This is the second piston in the engine, where focused companies raise their own aligned capital. Look at this number, €23 billion. Wow, that is larger than the GDP of several small countries. That's the implied combined enterprise value for just two of Eni's transition businesses, Plenitude and Enilive. It's almost like a magic trick, and we're going to decode exactly how they achieved this massive valuation by spinning these units out as lean, highly focused satellites.
Now, what's really interesting about this slide is that this €5.8 billion figure, it's not some theoretical valuation. No way. That is actual, hard, third-party cash realized from outside investments into these satellites in just the year 2025 alone. By creating these entities that specifically attract aligned external capital, they generated literally billions in hard cash to fund their growth, and they did it without competing against the parent company's other priorities.
Let's walk through this holistic portfolio view to really wrap our heads around the scope of this. Eni is spinning out very distinct entities to attract very specific types of investors. So for Norway upstream, you have Var Energi, which actually hit 400,000 barrels a day ahead of schedule. Over in Angola, there's Azule Energy operating as a 50-50 joint venture with BP. Meanwhile, Ithaca Energy handles the UK North Sea. Then you look at the transition stars. Plenitude is rapidly targeting 15 gigawatts of renewables by 2030, while Enilive zeroes in on 5 million tons of biofuel capacity. By carving these out, an infrastructure fund can invest purely in Plenitude's renewables without having to buy into Eni's traditional oil and gas risk profile. It's brilliant.
Section 4. Anatomy of a working satellite. The blueprint.
Let's get into the blueprint phase of our engine teardown. We really need to distinguish a truly functional, self-funding satellite from just, a purely cosmetic corporate spin-off. Eni uses a really precise 6-part checklist for this. The first foundational elements keep the satellite anchored to the parent. So number 1, synergies ensure privileged access to infrastructure and the balance sheet. 2, group skills mean they still get to leverage Eni's massive technical capabilities. Next comes operational clarity with number 3, focused management, a dedicated team executing one single mandate. Finally, we hit the external market factors. Number 4, unlocking value puts a real transparent market price on the business. 5, aligned capital attracts investors specifically matching their risk profile. And 6, funding growth secures external proceeds to expand without draining the parent company. It's this incredibly elegant balance of parent support and total market independence.
Section 5, Selling into a Satellite World, a Commercial Pivot. All right, we've covered the architecture, but now we're pivoting directly to the B2B suppliers out there. Consider this your operator's manual. This is where we clarify exactly why this structural shift absolutely matters to your bottom line.
So what does this all mean for B2B suppliers? I'll just be blunt here. Treating Eni as a single, monolithic account is now a guaranteed commercial dead end. Seriously, the days of relying on a single relationship in Milan to secure contracts across the entire global portfolio, those days are totally over. Procurement, technical evaluation, marketing decisions, all of that now sits at the satellite level, not the center.
So here is your rapid-fire action plan. First, you have got to map these satellites as first-class accounts. Azule in Angola, for example, has its own buying committee. They need Angolan procurement readiness, not just some parent company relationship. Second, watch the capital events carefully. Every single stake sale is a clear forward indicator of funded programs. You have to read those sales as massive signals for future spending. And third, expect this to spread like wildfire. Competitors are actively copying this model right now. Building satellite-specific procurement readiness today is a capability you're going to reuse across the entire sector for sure.
And this brilliantly illustrates the ultimate lesson here. Value that cannot be inspected cannot be sold. Think about it. Just as Eni packages its oil assets and its data rooms early so their value is highly legible to outside buyers, well, B2B suppliers need to build their own procurement-ready evidence packs. You absolutely need documented case studies and a measurable digital footprint. Because honestly, if the satellite procurement team can't inspect your value independently, they simply aren't going to buy it.
So the crucial question we're left with today is this. Is your commercial value legible enough to survive an industry that is actively fracturing? As these major monolithic accounts spin into self-funding satellites, your go-to-market strategy has to evolve just as fast as their capital engine. Take a long, hard look at your evidence packs and your account mapping. Thanks so much for joining me on The Explainer today. Keep learning, and I'll see you next time.